So let me start the second part of the webinar. Sorry for the delay, we are just checking the mic. Tracking the forex market together, part 2, on 21st of November between 5:15 and 15:45 GMT. So it is a simple market tracking technique, and I'll explain to you the steps you have to follow in my trading system, and you'll be able to see that consistently it works in the market. So I have given part 1 between 9 and 9:45 GMT, and that is also available in FX Street website. I have given the link, and there you will be able to see the part 1 is being recorded, and you can listen to that in case if you want to have the continuity. I'll again explain here during the part 2 the basic trading strategies, because there might be different audience. So, and also those who have participated in part 1 might also come for part 2. So for the general interest, let me explain the trading strategies. Before going to that of the trading strategy, I wanted to show you the result of what trades I have just taken during the part 1 of the webinar, and then continue with it of part 2. Now, those who have attended part 1 might have noticed that I had taken a buy position during the talking hours or during the webinar time. At 1.2783 I took a buy position. I explained to you why I am taking the buy, because they made that extended downward move and afterwards continue to rise and go above that of the initial low and started going upward. Now you see in the live market code page they have breached the high also. So I'll explain with the help of the initial lows and the highs again the setup. Then I was able to close the position with a profit by 14 GMT. I was telling you earlier that I can continue the position during that of the US session also, as they intend to make the intentional move. But still, for the benefit of those who have come for the part 2, I wanted to take the positions again, explaining what could be the strategy for taking positions. So GBP again, I took a buy position around 59.16 and closed it around 59.43, and they went up to 59.46 at 49 at that time, and it got closed. Then again I made a profit. So here what I intend to make is not that I am doing a profitable trade. I just wanted to emphasize that it is a very dependable system for trading strategies rather than complicating ourselves. So let me come to the part 2 of the webinar again. So in this, let me explain again from the step 1. So we use the live market quote page as the tool for tracking the market. I will give the link also in the chat window. You can open it in a browser and watch current market levels, and with the help of the live market quote page we try to find, see, it is set up in GMT time frame. Now it is 15:05, so 30 minutes past the start of the US session. So what are the session timings followed by that of the players? 0030 to 7:30 GMT is the Japanese session or session 1. Then there is a naturally occurring gap of 30 minutes, 7:30 to 8 GMT, because the banks in Asia gets over with regard to their currency transactions for their exporters and importers, orders, and also forward cover. Later on there is a gap for the European banks to open for the official contracts to be established. So this gap is being used by the other players to make the false moves or try to hit the stops. Then European session is from 8 to 14 GMT. 14 to 14:30 GMT is again a gap time when the European banks close their transactions for the day, and especially with regard to currency conversions, the US banks open 30 minutes later. That gap is being used to make the upward or the downward false move, sometimes the stop ends. So your session starts by 14:30 GMT. So you might be wondering that you are calling it as an Asian session, European session, UK session, New York session, etc. But they are all being given for us to use it, but these are all the timings followed by that of the players. If you want to learn how the players are making the moves in the market, then we need to follow their timings rather than the timings which are given to us mainly to misguide us. So this I want to explain here. It is not my own timings, they are all the timings followed by that of the players, and you can just follow this and see how exactly they are making the early part quick moves and the late part quick moves. That is first 1.5 hours from 14:30 GMT when they start the US session up to that of 16 GMT, they will be making very quick moves in the market. Then later on the mid session comes in. On the last 1.5 hours from 19 to 21:30, they make again quick moves. In between is called as the mid session. So this is early US session, and the close towards close 1.5 hours is late US session, and in between is the mid session. So during the early and the late sessions, they handle the majors, especially Euro, GBP, USD and USD CHF, and also the commodity pairs USD CAD and Australian dollar. By making moves in all these currencies, only these 6 currencies, they are able to bring in volatility in the crosses. Whatever the crosses you trade, they are all being influenced by the moves they are doing it in the majors. And we have been given the impression that because of the moves of the crosses, the majors are making moves, but actually the volume in the case of crosses are much less when compared to that of the majors. So they make the moves in the majors, and then that influences to show volatility in the case of crosses. And also they make some moves. Now you find an interesting move in the market. You can see Euro is with a positive net change of 3 pips, and GBPN is also in a positive net change of 68 pips. So when Euro is going up with a positive net change, this net change is from that of the previous day close, US session close. How much Euro has gained? Only 3 pips currently, and it has gained some more, but currently it is showing only 3 pips positive net change, whereas USDN has gained about 68 pips from that of yesterday US session close. So when both are showing positive net change, it is considered as a contrarian move, because Euro is showing USD weakening move and USDN is showing USD gaining move. So now it has become red, but GBP still showing 8 pips positive net change. Euro GBP is showing positive net change, USDN is showing positive net change. When they show positive net change, it is referred as a contrarian move, because USDN is a denominator currency, GBP is a numerator currency in a ratio. So Euro, GBP and Australian dollars are considered as numerator currencies. JPY, CHF and CAD are considered as denominator currencies. They come in the denominator part of the ratios. These levels are nothing but the ratios between these two currencies, and in which up to the 4th decimal or 5th decimal we take and try to trade. So this we need to understand. So for that, what is most important thing is understanding the market timings followed by that of the players. Then in the live market quote page, what we do, in the live market quote page, we note down the initial low and the high around 3:30 GMT. Sometimes the high might be set around 2:30 and the low might be set around 3:30. Sometimes the high or the low or vice versa might be set. So by 3:30 GMT, we note down the initial lows and the highs. They are all referred as the initial high and the initial low. They are used as the reference levels by the other players. So we also need to use it. Whatever the tools they use, we have to use them. And other than that, if we use our own tools, then probably it may not explain what is happening in the market. Then the net change, the change from that of the previous day US session close. So it is a 24 hours market. So when you use GMT time frame 0000 time, it starts and ends by 24 hours GMT. So for the 24 hours day, they use them as the reference level, the initial low and the initial high. Then subsequently they breach the low and just hit the stops on the lower side in one session and hit the high and go above that of the high in another session. This is what they try to do it in order to earn from that of the traders. So a trader who is participating only for about 5 hours or sometimes 8 hours, or sometimes some traders keep awake for a longer time like 12 to 15 hours, and such traders still they will be using their local time, so they may not be able to understand what the players are trying to do it. So we go in for looking into that of the supports and the resistance at a given time. But the players make the moves in such a way that they alternatively hit the stops of the long holders as well as the short sellers in order to make their money. So ultimately for the players it is a money making process, and for us it is just trading and applying all technical analysis and find out whether it is working or not and things like that. They ask us to use all of them, but they use a very simple technique. The richest of the richest, they don't apply their mind. They want their money to work and they want to really enjoy, and they don't make any complicated analysis. So we need to understand that and try to trade along with them in order to make money. Now, when they are in the middle level, you just relax during the session, start or the late session. When they are near the high or near the low, we can try to watch what they are trying to do, namely the type of moves. That I'll explain with the help of the next slide. So what type of moves they are trying to do above that of the high or below that of the low, and then we'll try to take up from them. Now let me show the initial lows and the highs. And in the European session I have shown it, but again I wanted to briefly show it. Euro found the initial low 1.2771 during 3:30 GMT and the high was 1.2822. Now during the Japanese session they breached the low 1.2771 and came to that low of 1.2737, and during that of the European session they came above this and stayed above that initial low for more than 30 minutes. Then I said that I am taking a buy here because I was a little late, so I had taken it at a higher level. Otherwise by 8:30 GMT, 30 minutes from the start of the session, I would have taken a buy. Then I know for definite they will make a rise up to that of the high. So what happened? They rised up to that of the high 1.2822 and also made an upward stop at 1.2834, just about 12 pips above it, and now trading below that 1.2822, 1.2818, 1.2819 other levels. So it is 15:14 GMT. 14:30 GMT the session started. Let me explain how to read these moves. Then in the case of GBP, 1.5916 was the initial low, and they came down during that of the Japanese session 1.5884, and then went above this, and then I took a buy position there, and the high was 1.5929. They went up 20 pips above 1.5949 and currently trading still above that of 1.5929. So that is why you find GBP is in positive net change. Euro made a small dip and now coming to that of positive net change. In the case of USD Yen, which is an interesting aspect, as I explained that they wanted to continuously rise, inducing the technical traders to sell and absorb all the sells and continue to rise. And so they just made the initial high 81.97 and went up to 82.26 during that of the European session, and slowly gained again to 82.53 and still holding around 82.38.39. So 71 pips gain they have done it. So in the case of USD Yen, I explained that it will not make swings like Euro and GBP. If you are trading in USD Yen, you should be prepared for the one-sided moves. In the case of USD Yen, they try to, and many people call it as a carry trade, and actually what they do is they continue to absorb all the selling and continue to gain the levels in the case of USD Yen. So for several days they may do it, suddenly they may dump it and again start gaining it. So if you are on the wrong side, No trading strategy will work other than that stop it out and reverse the trade. And that to reverse the trade, you can take a buy during the next day near that of the low, so that you will be able to definitely make money. So if you try to make an understanding of the market using various techniques and subsequently you think that it will definitely work, so the market has to come down, USDN has to come down, if you think like that, then probably it might be a disappointment, because we need to understand how the players behave in different currencies. In the case of USDN and USD they make one-sided moves. They do a prolonged consolidation for a long time and then start making the gains, and they don't look back at all. And that is the type of move they do it. And in the case of Canadian dollar, they make an upward stoppant as well as a downward stoppant on a daily basis. So this is a different style. So they make an upward stoppant in one session and afterwards a downward stoppant in another session. Third session they make an upward stoppant. That sort of moves they do it and slowly gain it in the medium term. So 99.58 was the low and they have not breached it, and 99.78 was the initial high. They have breached and gone above and come below that of 99.78. So after that they are expected to make one more downward stop and then continue to rise. In the case of Australian dollar, they just breached the low only during that of the Japanese session, formed the new low from that of 1.0362 to 1.0341, and now they have breached again the low in the case of Australian dollar to form new low 1.0339, and then later on the high is not breached. So when they breach the low, I mentioned many times, the commodity pairs they tend to lead the market and lag behind. So you would have noticed that Australian dollar was gaining yesterday, day for yesterday, when Euro and GBP were not gaining, and now you find that Australian dollar is making a reversal, and which could be followed by that of Euro and GBP for a brief period, and only for this particular session. And again in the case of Australian dollar, they have come below that of 1.0362, formed 1.0341 initially and 38 now, and afterwards they are expected to come above that of 1.0341 and stay there for 30 minutes and start raising it. Then Euro and GBP will rise. So this is how they make this stoppings on the upside and the downside irrespective of the data release. So if you carefully watch it, there might be so many attributes from that of fundamentals, technicals, etc., and the players pretend to move the market in tandem with that of such expectations and suddenly reverse when the traders commit. So that is why you find that traders continue to sell expecting that drop in the case of Euro. If you see in fxtrade.net, many of the traders say that I added one more sell, I added one more sell and things like that. And you know, the players, they don't go by that of chat and things like that. They only go with regard to that of the inside information. And when they find that predominant of the traders are short above that of the, near that of the high, then they will take it for the high, so that they know very well the short sellers are the first one to come and buy it from that at higher levels. So they have made a meaningful trade of buy from that of the low and just taken it above that of the high, hold the market. Automatically the short sellers come and buy it from them out of fear. When they want to go for Thanksgiving holidays, and before that they will just do the short covering and say that it's a bad trade. And later on you find again the players start making the swings. So on a daily basis the players make the moves. Besides, they also make the moves during the first and the last week of the month, aggressive moves in order to handle the crosses. So this we need to understand. So I'll go to that of the other slide, explain the basic trading strategy. So we know that the majors are active during the early session and the late session, and the crosses are during that of the mid sessions. Now we are in the early session. We will try to find out what we can do with regard to Euro and GBP. We see now Australian dollar has come above 1.0341. so it is not a big drop. They simply make a dip in such a way so that the traders could take a technical sell, because many of the traders go in for a breakout trade nowadays. So the players know the traders' behavior, and accordingly they pretend as if the market is going to fall and later on rise it. On day in and day out they do it, and when they just made the drop during that of the Japanese session, and I was seeing in FX Trade a lot of blog posts and things like that. They expected further drop in the case of Euro, GBP, all those things, and probably they expect even 1.26 and 25 and things like that, and suddenly the players started gaining. So they create the market sentiment and act against that of the traders. I am not blaming any of the technical analysts, but the players, they pretend the market as if it is following technicals and fundamentals, and later on reverse it with some other attribute, and this we will not be able to follow unless and otherwise we follow the type of moves. So let me explain to you the type of moves they do it in the market. So they have two sets of moves. One is less than 30 minutes. So there are two types of moves. They do it in less than 30 minutes. One is stop and above that of the initial high and below that of the initial low. So during Japanese session, below that of the initial low, they made the downward stop and, but it sustained below there for more than 30 minutes. Then it becomes an extended move. Which prevails more than 30 minutes up to 2 hours. And earlier they used to make an extended move for about 75 to 100 pips and reverse it. Nowadays, due to lesser volume, they have just done it only for about 40 pips and then reversed the market. So stop and they do it during the early part of the session and the late session. Then false move. The false move are like this, they go up to that of the high and reverse and breach the low and go below. So a quick upward move, go up to that of the high, without going higher, they drop when the traders are long. In the morning, they did it like that. They went up to 1.2822 and then started making a drop to 1.2771 and suddenly dropped below that. So they go up to that of the high, without breaching the high in less than 30 minutes, they just come down and breach the low and stay below and drop or go above. Either way they do it, and that is referred as false move. So they go up to initial high or low and reverse. That is called the false move. So these things happen in less than 30 minutes. Then you come across the extended move. This they do it for more than 30 minutes up to 2 hours. And the last one is the intentional move. Why I call it as an intentional move? The intentional is revealed when they are making slow moves. The quick moves are false moves. The extended move is always a quick move. They just suddenly drop the market, induce all the traders to turn and liquidate the long and turn short sellers, and later on they reverse the market slowly. And the other one is the intentional move, in which after making a drop they slowly gain the levels, so which indicates that they are actually buyers. After that drop they do the circular trades and drop the market, they sell it to themselves and drop it so they don't lose any money, and then start gaining the levels. And if they start gaining the levels, then it takes more than 2 sessions. So they take the market more than 2 hours up to 2 sessions and start at the 3rd session and only then reverse the market. And also they alternate the extended move with that of the intentional move. That is why you come across market appears volatile. Because why they have to do it? They take an intentional move and buy a lot of positions and gain the levels and make one extended move again. And after gaining the levels, they book profit. So that we need to understand. We become bullish at that time. Freely we are willing to buy after the rise. But the players sell it to us. Then suddenly next day they make a downward drop. We all liquidate the long and stop out. Then they start gaining the levels again. So they do a sensible trade of buy near the low and book profit near the high. Whereas we try to do the technical trade of sell after the drop and buy after the rise. And we find that we are not successful in trades. So we need to understand what move they are doing it and then try to take the positions. If they are moving intentional move, then don't try to sell when they are rising on the upside. Similarly, when they are making a drop, don't think that it is a falling knife, so it has to endlessly fall. It's not like that. 2 sessions and the start of the 3rd session, then they will start reversing the market. So by the 3rd session, if you buy, you will be able to definitely book profit. I was telling you at the time of taking positions during the European session, 99.9% I'll be able to book profit in this session. That's what I showed it by following this particular methodology and understanding the types of moves they make it in the market. Always use stop, because stop loss is a must in any trade, because whatever we try to read by understanding the type of moves, etc., still the players can suddenly make a reversal or make a whipsaw move in the market and hit our stops. So just because they are hitting the stops, if you avoid keeping stop, that is not the solution. Sometimes they make a big drop or a big rise, and then it may attract margin call. Unless and otherwise, you have taken a very less position in the market. Because most of the traders have got a tendency of averaging. Whenever there is a drop, they try to accumulate more position. And without understanding, if they make further drop, there will be a margin call. So normally, the players are able to earn from that of the traders who take enormous positions. But if a trader is taking very less position, 1 to 2% of the equity, and after closing that position, only then they enter again in the market, the players cannot shake them. Because only if you take more positions, then automatically you become frightened when the market moves against us. Then you go in for a crisis management, and then you just liquidate, cut less loss making position and see whether you are able to earn and sustain the market. And when they make one more dip, you just lose your heart and liquidate. If you don't liquidate, the platform will liquidate your positions on margin call, and they become helpless. So don't lead to such situations. So use either stop, and if not, take a very less position in case if you want to take the position without a stop. Then take only 1% of the equity, the positions. After closing the position, then only think of another position and wait for the next session start. Wait for 30 minutes and see what they are doing it and enter into the market. So what is the basic trading strategy here? The entry. We wait for 30 minutes from the start of the session. 14:30 they started the European US session. So 15 GMT, we'll up to 15 GMT we'll wait, and currently it is 15:29, doesn't matter. So wait for 30 minutes minimum and see whether they are making an extended move or an intentional move. They have done already that extended move on the downside during Japanese session. That's what I explained. So they alternate with that of the gap time false move, then session starts swing, then intentional move. And this intentional move starts after breaching the high. Sorry. After breaching the initial high, the intentional move starts. So now only during the late European session they breached the high. So they need to hold for 2 more sessions. Then Japanese session, US session now, and the Japanese session, they are expected to continue to rise. Only by late European session tomorrow they are expected to make the drop. So if you are short and you have to wait patiently till tomorrow US session, then you will be able to book profit. And if you are not able to handle the positions, if you are taken over trading, then use the entry stop hedging order to limit the risk. Book profit on the higher side on the hedge. Then when they drop next day, on the lower side, book profit. Either way trades can be done that way. So we enter by identifying the type of moves. If they are just done the stoppment below that of the low, like now Australian dollar, they just made a downward stoppment and started gaining and holding above that of the initial low. So when the market is closer to that of the low, we can take a buy and exit. So we take profit near the opposite level. When you have taken a buy near the low, we try to book profit near the high. We keep a limit order, and once the position makes profit, keep 15 pips trailing stop in the profit making position, and as long as the position is making loss, we can keep 30 or 20 pips stop. And because the hedging order facility is not available in US platform, and once the position start making profit, immediately keep stop at entry so that you don't lose your hard-earned money. So the first and foremost thing in trading, what you have to do is you arrest the loss, then start earning. Instead, if you think that holding the position is more important and you try to trade without a stop and things like that, when they make the move opposite to your expectations, then you become panic. So whatever be the type of studies you do or the technical analysis you do, still try to inculcate the habit of using the stop and see that you accept the loss when it is small. Don't allow the loss to multiply. And similarly, those who allow the loss to multiply, invariably when they see the profit, immediately they grab the profit and later on repent, I could have held the position for a longer time and maximize the profit. So this is what happens. So as a professional, what you have to do is, when the loss is minimal, try to accept it. And when the loss, don't allow the loss to magnify. When you see the profit, try to use the trailing stop and move the limit order in order to maximize the profit. So that is the strategy, and you will be able to do that if you understand the type of moves they are doing it in the market. So let me go to the trading condition. Okay. Euro GBP, if you watch, they are holding in the middle level, and still it is around that of the initial high. In the case of euro, 1.2822 was the high. They are selling actually there. We will not take position there. We will look for a small dip and then try to take a position. Whereas Australian dollar is closer to low. They made a brief downward stopment and then come above, and they are holding it above that of the initial low. So in the case of AUD, I'm sorry, 1.0344, we are trying to take a buy. So 30 pips below will be our stop. $1.0314. Our exit will be the high what they have set. Initial high they are not breached in the case of Australian dollar. Only in the case of euro and GBP they have breached it. So 1.0394 will keep the limit. And to be on the safe side, we will keep about 2-3 pips below that, so that the stop is 1.314. Okay. So I just explained with the help of Australian dollar. It has just breached the low and come above the low in less than 30 minutes during early part of the European US session and stayed above there. So we are trying to take a buy and keep a limit near that of the high what they have done, what they have set. But we keep 2-3 pips below that of the high because the platform might not be in a position to give a definite fill for us. So to be on the safe side, 2-3 pips below that we are keeping a limit. This limit we can move upward if they continue to rise, and similarly this stop we keep initially. Once the position makes about 15 to 20 pips profit, we can just remove the stop here and keep stop at entry so that we don't lose any money. Then subsequently we trail the stop, maintaining 15 pips from that of the market. And when you see when they are coming closer to high, how they are handling the high during the late session. Because I had taken the position during early session, I will not try to close it during the mid session, but I will wait for the late session to happen and then close, maximize the profit. Because as I explained that during early and the late sessions they handle the majors. In case if I am taking positions in them, then I have to wait for the end of the session to close it. So this is the basic idea of this trading strategy. Now they are making a small dip in the case of euro and also in the case of GBP below that of the initial high. So they intend to make a swing. Why they are making a swing? In order to handle the respective crosses. So they also made a dip in the case of yen, and as I explained in the case of yen, 82.29 was the high what they are set during European session, and they are closely holding it closer to that. So we can take a position in buy position in the case of USD yen. So I'll just keep a limit order 82.33. Currently market is slightly higher. So 1 or 2 pips or 2-3 pips below that you can keep the order. And once they fill it, you can just take it and keep 30 pips below the stop. So we can keep the stop below that. And the exit for it will be near the high, but as I explained that they intend to continue to gain the levels, and so you can do a position trade, because normally they do one-sided moves in the case of denominator currencies like USDN and USDCHM, and either way happens in the case of Canadian dollar. So if you understand the way in which they are handling those currencies, you can try to take the positions in those currencies and you will be able to see that easily you can earn. So no sentimental attachment to any currency pair. We identify the currency which is really making sensible move, which has got a spread more than 40 to 45 pips between the low and the high. Only then we try to enter into the market, and when it is near the low we try to buy, when it is near the high we try to sell. When the high has not been breached for more than 30 minutes we try to sell and book profit. But again we can do sell and buy trade, but hardly it will be about 5-10 pips in the case of euro GBP. Instead we look for a small dip and then try to take the buy positions here, similar to that of the European session what I have done it. And as they are not going above that of the high, the new high what they have set, so for 30 minutes, so they are bound to make a small dip. So what they do is during the mid session they try to handle the euro and GBP differently in order to handle their respective crosses, euro GBP cross, euro CHF cross and things like that. So during the late European session, people might have, you would have seen that euro was in positive net change, CHF was in positive net change. They quickly gained the levels in the case of GBP CHF. No, GBP and CHF they have been showing it in positive net change. Now GBP and yen they are showing it in positive net change. So they will handle the crosses, and afterwards they will continue to gain the levels in the case of euro and GBP because it is an intentional move. They will not just make a big drop. They will just make a small swing, 5-10 pips. So we will fine tune our entry probably about 5-10 pips below that of the current level. We will keep the limit order and they will give a definite fill. Then we can try to keep hedging order for them and try to maximize the profit. So in the case of euro, $1.2810, I'll keep the buy limit order. And in the case of GBP, $1.5917, just 10 pips below that of the current level, and keep 30 pips below this stop. So if you try to take positions like this, understanding what sort of moves they are doing it, you'll find that the trades really work for you, and consistently you'll be able to earn money from that other market. So this is not the first time I'm showing this, and I've been doing this tracking the forex market together webinar for nearly about 5-6 years, and I have been giving earlier twice a month this webinar, and now I am doing it as a monthly webinar. And every time I explain the same concept and also explain to you how exactly the positions can be taken so easily, understanding what sort of moves they are trying to do it. And if you are able to follow it carefully and make a good understanding of their type of moves, then you will find the art of trading will be really in your mind, and automatically you will be able to make a note of the initial low and the initial high around 3:30 GMT and try to look for quick moves on the downside or on the upside. So don't take any position during start of the day. See that they make a wide spread between the high and the low by making either a downward stop and or an upward stop and. They make an upward stop and very quickly understand they wanted to drop slowly during the day. Then you try to take a sell position. And if they quickly make a downward move, understand they wanted to gain the levels later on during the day. Then take a buy position, you will be able to book profit. So this understanding is very important. So if you become bearish during the drop, become bullish during the rise, then we tend to do wrong trades. But the players are neither bearish nor bullish, because they drop the market and initially make the buy positions and rise the market and book profit. So where is the bullishness and the bearishness involved in that? They only induce us to just use the word bearish and bullish alternatively, so that we are emotionally triggered. Once we are emotionally triggered, we don't mind selling around 1.2767 or 1.273747 and things like that. Or when they make a small pullback, I'll sell 1.2779 and get struck, because we have got the bearish mindset. And similarly, if you have a bullish mindset, we try to buy at market when the high is set, thinking that they will make another 15-20 pips rise, because 1.285056 is considered as a resistance level. So definitely they will go up to the resistance, I'll buy, but they will make a dip. So understand what sort of moves they are doing. Then we will not commit ourselves quickly in the market. Always keep in mind, market rewards patience. If you patiently watch without a position, and when a good opportunity comes, if you enter into the market, you will be able to consistently earn money. Instead, if you become addicted to trading and continue to hold the position, thinking that holding the position is more important for earning, then it will create unnecessary tension for you. You will not be able to do any other work. Constantly watch the market and sleepless nights, things like that, and which invariably make you to lose the money. You become angry with everybody and start yelling at others, but no fault of others. So you have to understand, you have to assume the responsibility for your trading, and in that your understanding is a must. I can give you a trade call like this, you can buy here, you can sell here and things like that. If you simply follow it, that means you become part of herd. and part of the group of people who simply follow others. So don't be like that. Develop a system. I have given my ideas. You use your own ideas pertaining to that. These are all my observations. You would have observed with a different perspective. Then you just use both and try to find what is the best method for you to take positions in the market. Use chart or whatever it is, but ultimately see that you are able to quickly take decision with regard to entry and exit, and also you are able to fine tune your entry, not simply take the market position, keep limit orders, so that gives you the time for you to see what they are doing. If they come closer to you very quickly, probably you can remove the order and fine tune and keep a better buy lower at a lower level. If you grab it at the market, then only you tend to repent that, oh God, I bought it near the highest level. So don't be in a hurry in taking position. Market continues to give trading opportunities, and day in and day out, 24 hours non-stop, it gives the trading opportunity. And ultimately, whether you buy around 1.28 or 1.27, it is immaterial. How much of profit you are making out of the trade is more important, which is going to be which will be added to your equity, and not the level at which you entered or the level at which you exited. So once you give more importance to the levels, you fail to understand the type of moves they are doing it. And the long-term perception of the market is they do a lower level consolidation around 1.20 level. In the case of euro, now they are doing the middle level consolidation, and they are expected to take it further high. But if you want to do a long-term trade, then you can only do non-leveraged trade. You can only take positions at par, that is without any leverage. Do the currency conversion, buy euro around 1.28, wait for euro to go to 1.38 or 40, and then exit, convert it back into US dollar. Then you will be able to earn quite a lot of money. In a leverage trading, whatever the position you have taken, you have to close it in the market. Keep it in mind. So there are different type of traders, so don't compare yourself with the other type of currency conversion traders. They may look for long-term calls, but as a small trader, you know that if you hold the position for more than one day, the platform will charge the overnight interest. So understand the limitations. Try to take the positions and close the position within the same session, so that you will be assured of the profit. And between the sessions, they have to necessarily induce the traders to commit wrong trades. Only then they will make the move. Till such time, you have to wait patiently by keeping a limit order. If you are not having that enough patience, then try to close the platform and just have a break and come back and review. Instead, close the platform and look only into that of the live market quote page. When a good opportunity comes, open the platform and try to take the positions. You will be doing a better trade. When you look into the platform continuously, that gives the strain for your eyes, and you feel you wanted to just commit, and you try to take the position because somebody has said, without using your own reasoning ability. So if there are questions, I will answer to those questions. So now, as far as our Australian dollar position is concerned, which is slightly up, still euro and GBP are not filled. I am just waiting for them to do it. It is 15:49, so I have to wind up the webinar. If there are a few questions, then I will answer to those questions. Okay. What are the exit level for euro? So euro exit level, initially it will be near high. No, there's such a narrow range. But once they just breach the high and stay above, then they are expected to make a quick rise. Then wait for such a rise and take a trade, and that will be able to give a good profit. And entering here, and you have to quickly keep stop at entry. That is why I chose an Australian dollar, which has got a better potency when compared to euro and GBP at this particular session. Then extended move is confirmed after 30 minutes or 2 hours. Extended move is confirmed after 30 minutes. See, they make a drop, and if they come above that of the initial low in less than 30 minutes, we understand it is stoppant. So 1.2771 was the initial low. They came down. but stop cutting the new low for 30 minutes, but still they are not come above that of the initial low 1.2771. In that case, they hold it for 2 hours, induce the traders to sell, make them to feel that euro doesn't have the strength to go up, then later on absorb all the buys and take up the market. So that is extended move. Then another question from Chip. Is AUD at current level overvalued? Not at all. See, you have to understand one thing. When you go in for the currency conversion in the banks, they will be giving about 200 to 300 pips different from that of the market levels. So if you think of valuation, if you go to bank and convert US dollar into euro, they will be giving a different rate, not the market rate for your currency conversions. At least 200 pips away from that market, they will try to give that levels. So, and if you try to buy, then above that of the level, they will try to give it to you. So always the bank will keep the cushion for them to liquidate that particular currency, what they are taking it from you. And there comes the valuation. Here it is a pip change, small pip change of 100 pips on the second decimal. The value will go by 1 cent, 1.04. That means is gained by 1 cent against US dollar. 0.5, 2 cents against US dollar. So that doesn't make a big difference as far as the valuation is concerned. So they try to use different type of words what they have been using in the financial market, but that is not applicable with regard to small pip changes. Then Douglas, do you offer even more in-depth? Yes. But what I am explaining here is the basic trading strategy, and advanced trading strategies are given in my training program. Then money magnet. Should we be expecting the players to let the N crosses correct soon? No, they may not. They wanted to see. They are doing contrarian moves, gaining the levels in the case of euro, GBP and USD yen. That means the N crosses, they want to take it. Later on people might call it with a different name like carry trade or whatever it is. But ultimately, what they are doing is they are accumulating the positions and they want to just weaken yen. And as a result, you will find N crosses will also go up. And there was a big trick, long-term trick happened in the case of USD yen. And about in 2002, 2004, when yen was around 118 to 124, and zero interest loan was given freely left and right to big corporates in different parts of the world, and they are all taken that currency because the interest rate was almost zero. They thought that they can hold it for a long period, like 3 years, 5 years, 6 years, and things like that, and hardly they pay any interest. But what happened after distributing all the loans, they just made yen very strong. They dropped USD yen to 80, 77 and things like that. So instead of interest, they have to pay the currency differentials. So this is the one way of making money, by cheating or cunning action, nothing more than that. That is why you have found that USD yen has become like this, below 100. And they took it to 134 in 2001, and 2001 USD yen was trading around 134. So they can do all sorts of extreme moves in the market, and they call it as a carry trade or whatever it is, but it is immaterial. But we have to be very careful. They tend to make one-sided moves in the case of denominator currencies, like how they had done it in the case of USDCH. Drop, 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 drop endlessly, and then started reversing it. Okay, near the high, if we should do it close to the low, yeah, if you want to close, you try to close it when they are making a small dip. And don't try to go in for an average trading. Try to take another sell and then try to close it. It may not work out very well. Nambia, do you have automated software with your algorithm? No, sir. I do not want to develop automatic software because the market continues to change. It is a changing environment, so obviously we cannot use a static method in a changing environment. We need to have a dynamic method understanding the current scenarios, and the volume has come down now, so accordingly the swings have also become reduced. So the automatic software will not be able to understand all those things unless and otherwise we continue to update it. Instead you can do manually. And I intend to say that never the machine can overtake human. Then why do you say euro will go up? It was at 1.2737 during the day. They dropped at 1.2737 in 3 successive drops very quickly. Quick moves are false moves, and afterwards for 30 minutes they stopped cutting it. If they had cut the new low in 30 minutes time frame, then I know very well they wanted to make an intentional move on the downside. I will not take a buy. I will wait for the 2 sessions to get over. Third session drop, I'll try to take a buy. Hope you are able to understand. Okay, fine. Let me finish the webinar. Its time is up. So I'll show the last slide. So I take this opportunity to thank FX Street and also you people who have come here to listen to my webinar. This is my contact and also my website address and also my email address, my chat address, phone numbers, and I'll come back again tomorrow during the Asian Session Live Market Analysis webinar by 5 GMT. If you have benefited, we will try to fine-tune this because I had taken this particular study only to a certain extent, and if you are able to take it beyond that, I'll be very happy about it. Thank you one and all. See you tomorrow.